Hey guys, good morning. Bald Money Man here, and today we're going to talk about the hyperinflation crisis that hit Spain after their atrocities in the Incan Empire. In order to understand what was happening in Europe at the time, we had to take a couple of steps back and see the financial situation they were in before all of this silver was discovered. Just to the east of most of the European countries, there were Middle Eastern empires that had very vast and large trade routes, mostly due to the fact that they were sitting between some of the wealthiest countries, those being the European ones, and some of the ones with the most products to offer. That was being China, Japan, and the spices coming from the Indian Peninsula and the surrounding islands. The Eastern empires became large central hubs for money to go into, meaning that the physical silver and gold were traveling from Europe and heading to the Eastern Empire. What this led to was an illiquidity crisis in most countries in Europe, especially places that were not very heavily traveled due to trade. This is sometimes called the big problem with small coins. Most commoners would not trade vast amount of gold pieces. They would usually use the bronze or the silver or the lesser denominations because that is one, what they could afford, and two, what they were buying. They weren't buying things that would cost a gold, they were buying things that would cost a couple of bronze pieces. So these were the ones that were used the most. What happens when you have a whole entire population that is using only a single type of coin when there are many out there? It usually becomes more and more scarce, thus pushing up the value of the coin and making it harder and harder to use it to trade for smaller items. Basically what you have is the bottom level of currency, let's imagine this were pennies for the United States, is suddenly being raised and raised more and more to where a penny is almost as worth as much as a dollar. And the problem comes when these become so scarce that you can't even use them to buy the things that you were used to buying with them. So suddenly you have no currency that is within your grasp. It's left for the nobles, the elites, the very few upper middle class that was available at that time in Europe. So to combat this, the more backwood areas of Europe would start trading again. They would start using squirrel skins or any other commodity that they have that was plentiful enough to be some sort of pseudo currency. But as we know, this is not a good system and eventually leads to a lot of friction within the economy. So as it seemed, Europe had found itself in the middle of an illiquidity crisis that they did not know how to solve, nor had enough resources to solve. So Europe was left with two options. One, they could make an effort into taking all of their goods and trading as much as they can with the Eastern empires in order to get back their money. This would require them to transition from a state of always being the ones to pay for goods to becoming the ones that made goods and had the Eastern empires pay them. This would balance the coins in the two empires and fix their liquidity crisis. The second option was to go to war, plunder as much gold and silver as they could from those Eastern empires and take it back to the Eastern kingdoms. And sadly, this is what they went with, under the name of the Crusades. But as most of us know, the Crusades did not go that well. Not for Christianity, not for the people fighting them, not for the people getting fought, and definitely not for the monetary value that they were supposed to have. Out of the more than 6 crusades that happened, not a single one of them could be called a complete victory, and most of them would be regarded as total failures, both monetarily, strategically, and religiously. That's when the events of our last story happened. And suddenly, vast amounts of silver were being shipped to Spain. This silver did help to solve the problem of illiquidity. Suddenly there was a vast amount of silver, and it could be used for trading and led to very, very prosperous years for the Spanish Empire. For almost about a decade, they became the richest nation in Europe. But, as seems to happen with most countries even nowadays, with great wealth comes great hunger for war. And that's exactly what Spain did. Having the money to, they built the ships, they built the infantry, and they built the weaponry. And with all of that sitting around, how can you not go to a bunch of useless wars? All of this new earned money went straight into conquest and siege. Now, it was not a good time for the lower class, because those who truly make money off of creating new currency are those that are in charge of the creation of the currency. Basically, this is what would happen. The silver would get sent in from the South Americas. It would get sent to the Spanish mints. In these mints, they would turn the silver into the coins. These coins would then be used to buy goods at their full value. The problem with this is that once the coins went into the market, And this happened enough times where suddenly there were so many silver coins in the market they weren't worth as much as they used to be. The people who took the coins as payment suddenly had less buying power than they thought they were going to receive for their products. And if you take into account the massive scale of silver coming in to the Spanish Empire and the amount of time that this was happening for, this effect started to compound. And suddenly, a silver piece couldn't buy you a loaf of bread anymore. You needed 10 silver pieces, 20 silver pieces, 40, 50, 60, 100 silver pieces. So much so that in the first time in over half a millennia, Europe started to experience inflation. This was one of the first bouts of inflation that had ever hit Europe. And just like in America today, when we went off the gold standard, they were surprised that their money was suddenly worth less than it used to be. So in essence, the people producing the money got the full value of their silver, while the people taking the money as payment suddenly were left without the value that they thought they had. But this always catches up to a government in the long run, because Spain did not use this newfound wealth to build infrastructure, do public works, or expand education. They used it for war. And in the end, war is just a destructive business and provides no long-term value for the people of a nation. And in the end, the only thing that Spain had accomplished with their murder in the Latin Americas and their importation of thousands of tons of silver was debasing their own currency and leaving their people with coins that were worth next to nothing. And I think this speaks truly for what the connection of money really is. It's trust. When your employer gives you a $100 bill for your work, you trust the American government to not debase that currency. You trust him to manage it in such a way that the store of value will continue until you need it to buy other products. And that's all it really is. Money is just you trusting an authority to say that this will have value in the future and that you will be secured more products or other goods in return for your services or products. And this connection between lender and borrower is the basis of credit and the basis of how many monetary policies today are run. We'll cover that next week, but for now, thanks for watching. This has been Odd Explains, and I hope you have a great day.